What's going on, guys? D. Anthony here with Evolution Traders. What I'm going to go over in this video is kind of teaching you guys how to understand early on in the day that your strategy is not working, or the price action is not really permitting you to be able to take trades and be profitable. So this morning on the live stream at Evolution Traders, I was kind of trying to figure out, what is the momentum of the day? Is it long? Is it short? It took me about 45 minutes, 50 minutes to kind of quickly realize that off the open, we did not have a direction. So what I was trying to kind of pass the message along to my traders was that if we are going to take trades, there's a high probability and likelihood that you're going to take a lot of paper cut losses. And this is going to come with experience. It's also going to come with time. But I'm going to back test. I'm going to show you guys what exactly I'm talking about. Now, again, if you were using the 20 SMA strategy, more than likely you probably took 2 or 3 paper cut losses. You probably got chopped up a little bit. So we're going to see a couple of things right off the open here. Let me kind of switch my tool. Right off the open here, you can see that we get a close over the 20 SMA that does confirm, however, gets stopped out for a pretty hefty loss here. This loss would have been somewhere around 30, 35 points, maybe give or take a little bit more or less, depending on, where you got filled and where you decided to want to get out. If you were, playing a close below the 1 bar stop, or you were playing just a tag of it, give or take a little bit. Now notice how you get a little bit of a short play that confirms here that also gets stopped out. Notice how you get a long play that sets up here at 7:35 PST that also gets stopped out. But then notice you get 2 back-to-back short setups that do go for a pretty nice win. So you would have, essentially eaten up 1 or 2 of these losses here. Essentially, probably still would have been down. Maybe depending on how many trades you took, could have been flat. But what I want to avoid is getting chopped up. So let me kind of explain to you my thought pattern. Typically, when the market is trending and when you are able to catch good trades, normally there's anywhere between 3 and 5 20 SMA plays that kind of set up and actually work, right? Sometimes it's 3, sometimes it's 2, sometimes it's 4. However, if you kind of look at the price action off the open, you'll notice that 1 play didn't work, 2 plays didn't work, and then you notice you get a 3rd play that doesn't work. It's not realistically until the 4th or 5th play that starts to work. Now, how can you identify what's really going on? Well, if you already know, based on the numbers, right? Based on the statistics of this strategy, that you're going to get between 3 and 5 setups a day, and you have now looked at 1 trade fail, 2 trades fail, 3 trades fail. It's at that point in time you need to quickly understand and identify something's not right. Okay, something's not right. If normally we're getting 3 to 5 setups that work all day, but I've gotten 3 setups within 30 minutes, within 45 minutes, and none of them have worked, at that point in time you need to tell yourself this is a range bound day. Now, it completely slipped my mind that today was FOMC. I didn't even realize it until about 35 minutes after the market opened. And as soon as I identified that, I knew that price action was going to be slow until later on in the day. And sure enough, you can see, obviously, later on in the day, we absolutely exploded. So the levels that I had marked out here was about 45 minutes after the open. I'll say 1 hour the latest. So within the first hour, I already knew that we were in a range, and the levels that I was looking for was 16,596 to the downside, which did confirm. You get the confirmation below. We break that price action. We get the entry, bounces up to the 20 SMA, rejects. Your stop loss would be a close over the 20 SMA. And then it does come down. It gives you around 20 points, right? Gives you around 22 points to the downside. And then the next real play was going to be a break of the highs, which was 16,657. So we were playing with inside of a 60-point range. Anytime the NASDAQ is playing within a range that's that tight, typically what you want to do is wait for one of those sides to break. And when one of those sides breaks, that's when you want to go long. So if you would identify that the price action was horrible off the open, and you know that we have news today, there's a big, big news, FOMC's big news. If you understand that, your best bet is to identify that early and sit on your hands and wait for one of these levels to get broken. So maybe you would have been looking to take a trade here. If you took one trade, two trades, a couple paper cut losses, that's fine. Don't sit there and try to trade back and forth, back and forth, back and forth when you're inside the range. Wait for one of the sides to break. So maybe you could have eaten up some of those losses from maybe the first or second paper cut that you took here, and then kind of sit on your hands, wait for the news. And then do we confirm the lows? Since we did break out of the range, do we confirm the lows off the news? Then you would have wanted to be short below 16,575. Or does the market react nicely and does it break to the top side? And you would have wanted to take this play here. Okay, whoops, that play there. So as soon as we break outside the range, we put in a new high. Once we confirm on the next candle, which is here, you want to be taking this candle, and this candle was 1105. So notice how you're going to get in on the confirmation over the range. Now you're asking yourself, what is my stop? Well, I sure as hell am not going to use a 1 bar stop on this particular play because we're looking at 60, 70 points. It's just far too much. You could use the 20 SMA. It's still about 40 or 50 points. I would personally look at the breakout, 16,657, and just use that as your stop. If that was the range we were looking to confirm and get over, well, then if I break that range, come back down to it, the breakout spot, and now close below it, more than likely, maybe the play's probably not going to work. But as you can see, we break over the range, we get the confirmation, it kind of does nothing for 5 minutes, then shoots up, rest, pulls back a little bit, and then continues higher. So how do you navigate the markets when your strategy is not working right off the bell, or the first one trade or two trades? You have to really be disciplined. So what you can do is, let's say you take one trade, because again, these are valid trades. This was a valid trade long. This is a valid trade short. This was a valid trade long. This is a valid trade short that does end up working. This trade does work. If you notice, either one of these short positions does work. And then it obviously continues all the way down. So these two are winners here. You would have taken a full 1-to-1 on it. Your profit was about, I'm looking at around maybe 20 points here, maybe 15 points here. So this could have worked anywhere between, depending on if you took one or you took two, could have worked for, 20 to 30 points, right? But notice how in between, you also get a long setup, right? But if you were in on the short setup, you wouldn't be taking this long setup because you would already be in a trade and you're not stopped out yet because it's not over your 1 bar stop. So it's not valid because you're currently in a short. So you can't be in a short and in a long at the same time. It doesn't make any sense. So you kind of have to let that one go. And if it does go, you get stopped out and then look for the next play through the break of the high range here. So 1 stop out, 2 stop outs, 3 stop outs. So once you start to realize that, hey, I'm getting stopped out a lot. If I'm normally seeing these plays and it's 3 of them or 4 of them or 5 trades, 5 of these setups that is happening all day, but I'm getting 3 or 4 in the first 30 minutes, the first hour, something's not right. What I want you to do is start to look at the highs and look at the lows. That's the range that you're playing in. Then from there, we're not looking to take any trades at all until we get outside of that range. So until the market can prove that we're going to break to the high side or to the low side, that's when we want to start trading again. So save yourself from the paper cuts, save yourselves from the stress, identify early, right? Whether it takes you 30 minutes to identify that, takes you 1 hour. What we don't want to be doing is, let's say, for example, we're 3 or 4 or 5 hours deep into the market and you're still taking every single little paper cut trade. That's one way that can kind of protect you. That's going to come with experience, and that's just going to come with taking trades over a long period of time. You kind of start to identify the way that price action moves. I try to catch it for my guys as soon as possible. I mean, maybe I was 35 to in 35 minutes to an hour before I really understood, hey guys, we're inside of a range. Let's not, put our foot on the gas too much. If we do want to take a play, understand that there's a high probability that we're probably going to get stopped here. And if we don't get stopped, let's, take our profits where we're supposed to. And let's kind of just sit on our hands until we break the range. So when we break the range, that's when you want to start trading again. So don't get caught up in the ranges, especially if you're in prop firms. You don't want to get caught range bound trading. You don't want to be buying every time we're down here, selling every time we're up here, because there's a high probability you're just going to get chopped out. So again, save yourself from the stress. Understand and try to identify early, is the market trending higher? Is it trending lower? Or is it in a range? If it's in a range, you have to stay away. Stay away until we break the range, and then you want to start trading again, okay? So what to do when your strategy does not work, because obviously today there was 3 losing paper cut trades right off the bat. As long as you're not trading oversized, yes, maybe you took some losses, but you should not have gotten blown out. You should have not blown up an account for sure. And if anything, and if you were taking this one long, this one short, this one long, then you should have been in on one of these shorts as well to kind of eat up 2 of these losses prior, right? So again, I mean, would you have been profitable? Probably not, but maybe the damage would have been a little bit less. And then you could have kind of waited for the downside to break and maybe caught, 10 to 20 points on the downside. And then maybe kind of have told yourself, okay, we're setting up to the long side here. I mean, God forbid. I mean, congratulations if you were actually in this long play when we took off. I mean, you really would have made some good cash. But, the realistic play was to, kind of wait for things to break the top of the range here and then wait for the confirmation and get in here. Right. And then so what you would be looking for a take profit, honestly, because I was just asked this question. The ATR prior to the big move was only sitting at around 15, right? 15 points. So I would have been looking for 15 to 30 points. And then I would have just got out, got the 1-to-1 on it, kind of eat up my day's losses or put me in the green a little bit, and then kind of held a runner. So if I took, let's say, 3 contracts, at 15, 20 points, I'm going to sell 2, and then I'm going to hold that last one as long as it doesn't take me out, close below the 20, get below the breakout, and then kind of just hold it. And then when I do decide to sell it, understand I'm done, right? Like that's it. We're not chasing a new high. We're not doing nothing like that. You got to just be patient. So it's, again, how well are you managing? How well are you identifying where's the trend, right? Again, I've been speaking about the trend a lot. You want to stay with the trend. Well, when the day starts off and for the first 30 minutes to an hour, there is no trend. What do you think is going to happen if you start taking a bunch of trades? You're going to get stopped out. You're going to get chopped up. You got to start waiting for the range to break down or break up before you get into those trades. So identify the trend. If you can't identify the trend, well, what is the range, right? What is the range? Then, if you can't really see if we're going higher or lower, there's obviously got to be a range going on. So then we need to take the low of the range and the high of the range, and then we need to sit on our hands until that breaks. So I hope this video helps you guys. I hope it saves you guys from losing money. And I hope it can, potentially make you a little bit profitable going on in the future. So if you did like the video, enjoy the content, make sure to like, comment, subscribe. I'll see you guys all next time.